Hello, everyone, and welcome to Momentum channel. My name is Mo, and in this video, we're going to be talking about Starbucks stock, ticker symbol SBUX. We're going to be sharing why Starbucks is a perfect opportunity for investors who are looking for both dividend income as well as a high growth potential with 25% upside in the next year. Let's take a look into it. Starbucks currently has a dividend yield of 2.59% and was last traded for the price of $75.67. It has a market cap of $86.8 billion, making it a large cap business. Last time that it increased its dividend goes back to September of 2021, where it increased it by 8.9%, resulting in a fast dividend growth. From a volatility perspective, Starbucks has a beta score of 1.2, which suggests higher volatility than overall stock market, given that it's over the threshold of 1. Starbucks operates as a roaster, marketer, and retailer of specialty coffee worldwide, and the company operates through 3 segments: North America, international, and channel development. Its stores offers coffee and tea beverages, roasted whole beans and ground coffees, single-serve products, and ready-to-drink beverages, and various food products such as pastries, breakfast sandwiches, and lunch items. It is actually based in Seattle, Washington, and was founded back in 1971. Looking at the dividend stats and details, some of the key metrics there, you'd notice that Starbucks currently has a payout ratio of 58%, which is edging higher for restaurants, and its forward payout ratio is at 63%, which might be high for restaurants. That being said, though, they have a solid track record of paying their dividend for the past 11 years, and in all of those years, they've increased it year after year. In fact, if you look at their dividend increase, it is shown to be fast or very fast. In the last 5 years, on average, they've increased their dividend 17% per year. And in the last 10 years, they have increased it on average 21% per year, which is a very fast dividend growth. What's more, during the recession years of 2007 to 2009, their sales was only down by 5.9%, which could suggest that, in a sense, during those recessions, Starbucks business was kind of recession proof, and they maintained their sales during those timeframes. Though the stock was down by 69%, which was worse than the performance of negative 55% for the S&P 500 from 2007 to 2009. Payment details for the Starbucks is on the quarterly basis. In fact, the dividend are paid quarterly in the months of February, May, August, and November, and their annual payout currently is at $1.96 per share. As for the stock and an assessment of whether it's undervalued or relatively valued, you can notice that given that the dividend yield is currently 30% above its own 5-year average, as well as a lower than usual forward price to earnings ratio for this stock, which is only at 24.2 compared to their own 5-year average of 27.7, we are concluding that the stock appears to be undervalued at this time. What's more, if you look at it, the stock last trading price of $75.67 is hovering a lot closer to its 52-week low price of $69.90, whereas the highest price that the stock hit in the past 1 year was at $126.06. Although the Starbucks forward price to earnings ratio is higher than that of consumer discretionary, it is worthwhile mentioning that it is just the nature of this business as well, and investors historically over the years have been assessing this stock with some premiums that you can judge that based on this 5-year forward price to earnings ratio. As for earnings per share, ideally we'd like to see companies that has its adjusted earnings over time increasing gradually and nicely. There was some exceptions to that, whereby, for example, you noted in 2020, and this is the year of the pandemic, their sales and earnings were actually impacted. As a result, earnings per share was hit to one of the lower levels in the past 10 years at $1.17. However, in the last 12 months, they are showing some signs of recovery with $3.32 earnings per share. It is, although expected, the next 12 months, their earnings per share would be a little lower at $3.13, which suggests a 6% decline. Moving on, if we look at their some projections by analysts, this one is based on analysts on 𝗖𝐋𝐈𝖖𝐊. You notice here that the earnings per share projections for the year 2023, based on their counting at September 2023, was expected to be at $3.46, which would be higher than what we've seen over the past 10 years. Let's us take a look at Starbucks and its sales. You notice here the total sales over the span of the past 10 years, how it's been performing overall, with the only exception of 2020. You are seeing that nice gradual step increases year after year, with the last 12 months showing $31.3 billion in total sales. And that suggested a 31% increase compared to the previous time period, which is nice. As for the revenue projections based on analysts on 𝗖𝐋𝐈𝐖 for the year 2023, it is estimated and expected to have a revenue of $35.6 billion. It's the forecast. And if that remains true, that will be the highest that they have had in the past 10 years. Let us take a look now at a number of additional financial metrics, such as shares outstanding, return on equity, and operating margin. As for shares outstanding, ideally, we'd like to see this number declining over time. The companies that buy back their shares are giving more value to their shareholders. In this case, it is what we are observing as well. In the last 12 months, we are seeing only 1.18 billion outstanding shares, which is the lowest that it has had for this business in the past 10 years, with the only other exception being in 2020, which they had the exact same amount of outstanding shares approximately. As for return on equity, which measures how many dollars of profit a company earns for every dollar that shareholders have invested, ideally we'd like to see for restaurants being at 16% or above. As of the year 2019, that has been totally the opposite. In fact, we are in the negative territory. So that could be a little red flags. That's why we are looking at a number of additional metrics, such as operating margin, which is actually a measure of profitability that divides operating income, which is what is left after a company deducts its cost of goods sold and operating expenses by their total sales. And the higher this number, the better it is. Ideally, we'd like to see 16% threshold. And we're noticing that in the 2021, as well as the last 12 months, this operating margin is meeting that threshold of 16%. In the past 1 year, you notice how the Starbucks stock has got hammered. It's down by close to 33%, negative 33%. However, despite that huge decline, in the past 5 years, cumulative, they're showing a 26% plus gain. Keep that in mind. This already takes into account your close to 33% negative return that the Starbucks has suffered in the past 1 year. And what was noticeable in the last trading day, the stock was down close to 4% as well. As for price projection and price targets by analysts covering the stock, there are 22 analysts on TipRanks covering the stock, with 13 of them giving it a buy rating, 9 of them giving the hold rating. No one analyst is giving this stock here a sell rating, overall resulting in a moderate buy. The anticipated price target 1 year for this stock, the average is at $95.05, which suggests a 25.6% upside for this stock in 1 year. The lowest price target by some analysts suggested here is at $76, but the highest is at as high as $136. Analysts on Yahoo Finance have a 1 year price target similar to that of TipRanks here at $94.40, very close to the other price target. And lastly, if you look at the analysts on Simply Wall Street, whereby they assess the fair valuation of the stock, they suggest a fair value currently at $101.31 US dollars, suggesting that the stock is also undervalued by 25.3%. Are you currently invested in Starbucks stock? Do you have Starbucks in your portfolio or plan to add it to your portfolio in the weeks or months to come? Let us know in the comment section down below and share your thought with us. I hope you found this video beneficial and you gained something of value from it. If you did, please be sure to give this video a thumbs up and share it with someone else who might benefit from it. And of course, subscribe to our channel. Here on Momentum Finance, we post every week several videos about investing, including investing in dividend stocks, growth stocks, penny stocks. We also talk about ways to reach financial freedom. Thank you, and I hope to see you next time.